G'day. I thought I'd put a video together based on pretty rough couple of weeks in the global markets, and the Australian share market is depicted here from late April through to yesterday, which is the 27th of August. So pretty tough week. You can see the low here of just over 5,000 represents the Monday just gone, where the market ended up 4% down. So we can talk about China and it's slowing down, and it's slowing quicker than what everyone thought. There's a lot of debt and a lot of empty buildings over there that have been built and then sold on speculation. So there's a lot of issues, and probably the thing that I'm keen to focus on is that the media centres really hype up this bad news. As we know, bad news sells, and that's what the media centres are very good at selling us. So what this does, I find, is really makes quite a lot of our clients very anxious, and it really doesn't help with our investment decisions. So when the market's around here and we're completing reviews of our clients, we're not recommending doing any buying around these areas, although people are feeling very comfortable with the markets. They've had a good run up. Some of the portfolios have returned some significant double-digit results, so everyone's very pleased with themselves. But it's when the market starts to get jittery, and particularly when the bad news kicks in, some bad days in a row, and we saw that over the last couple of weeks, that when I'm talking to clients in around here and on the Monday here as well, is and of course the days leading up to that, is where I really hear some tentative in the voices, and that they start to worry about what's ahead of them. Now, I've always said in the short term I have absolutely no idea what's happening in the markets, but one thing I do know, that if we're buying here, it won't be the bottom. We may have bought in around these areas as well. It still not may be the bottom. I don't know what's ahead of us. There could be, this is the last kick up of the last few days, it could be a whole nother leg down, or it could go back up. I don't know. But what I do know is I prefer to be patient and taking my time and buying on these tougher down days than buying in when everyone's very comfortable with the market. At the end of the day, we want to be buying when people are fearful, and when the news is bad. As a general rule, that's when my clients will hear from me. It's not going to be on the days when we're up 2%. It's going to be when the news is tough, and as I always say to my clients, it's buying when you least want to be buying. That's when the best value is had. So at the moment the share market is on sale, and it's the only shop that goes on sale where everyone runs to the front door and sells, which of course is the worst thing you could do. So I hope that's just a bit of a recap. It's forever a volatile machine. It's run on emotions, and the media hype that up. If it starts to worry you, start to limit your reading and what you listen to. Thanks for listening.